Stocks just hit new all-time highs yet again, starting off the biggest week of the season with some serious momentum. A US-China trade deal, interest rate cut, and massive earnings are all coming up. Get ready for some big moves.
As we can see, the SPY gapped up this morning and kept going all the way into market close. Just look at that strength as the SPY pushed past 685 and is actually pushing 686 here as after hours has started. As we know, there were a lot of revelations over the weekend about US-China trade deals. Of course, there's no deals done yet, but some of the frameworks that were talked about have really helped push the markets up to new all-time highs. And, it looks like the S&P 500 index is just under $7,000 a share. A lot of people have been calling for that to happen coming up this year at some point. Maybe it'll happen by the end of the year. We'll see over the next couple months. But Trump essentially today came out and helped confirm a lot of the optimism that we saw on Sunday. He told reporters that he feels really good about a deal with China. And there were just a lot of great quotes from Trump today. He said, "I have a lot of respect for President Xi, and we are going to come away with the deal." Now, of course, President Xi didn't say that, but nonetheless, if that does happen, I would think that would be pretty positive. And that's the main reason the market went up today, Mike. Everybody's really happy and positive off of those good comments that Besson had from Sunday, and then Trump came out today and just confirmed all the positivity.
So it's great to see all of this, but at the same time, a deal isn't done until the deal is done. So Tom, for all of the traders out there who are looking at this information and saying yes, it's great to see this, but at the end of the day, this is just a framework in positive comments. When we actually look at the market right now, what are some key levels you are seeing for SPY, of course, to the upside, but also to the downside?
So with the SPY right now, it's running up to new all-time highs. Of course, it just broke out, and we've been running up in a pretty crazy way today. With the way that the market gapped up above Friday's high around 678.50 was a fantastic move to see. Now, in the short term, I'm definitely watching a lot of the key whole dollar levels overhead. I personally really like 690 tomorrow. That would be a really good target if we continue up with some good momentum off of today's move. And really, for the next few weeks, I could feel a lot of traders targeting that $700 range. That is going to be critical. Every time we have a whole dollar level, especially every $100, whether it's 500, 600, or in this case 700, there's usually a lot of reaction there. So be ready. I'm sure there's going to be a lot of calls for SPY to hit 700. But whenever I look at the price action today, there was definitely a lot of resistance / support around 683 to 683.20. That'll be a pretty critical area of support for tomorrow. If the SPY starts breaking below that and then breaks below the pre-market support around 682, I will start to watch it back down to possibly fill this gap. There is now a pretty big gap to fill on the chart, that's for sure.
So that is good to see. Let's keep a close eye on all of these levels, but another thing to keep in mind is that historically speaking, we tend to see a pretty strong run up towards the end of the year. And believe it or not, on average, going all the way back to 1950, stocks tend to bottom around October 27th, which is today. So, of course, that doesn't mean today has to be the market bottom, but on average, this is normally when stocks bottom, which is great to see. And, it definitely helps, add to a lot of the bullish things we are seeing in the market right now. But Tom, as we know, the US-China trade deal is far from the only major event this week. We also have a highly anticipated federal interest rate decision. What is going on there?
On Wednesday at 2 p.m. Eastern Time, there will be an FOMC interest rate decision, and as we know, cuts have been being priced in. There's a 97.8% chance as of the end of the day today that there's going to be a 25 basis point cut at this meeting. All traders have been anticipating this, and that's been a lot of the reason as of why the market's been going up lately. Of course, the market's pricing this in, and as we've known, rate cuts have been pretty bullish for the stock market. Now, of course, there could be a buy the rumor, sell the news situation. We will talk about that as the week goes forward, but be ready on Wednesday at 2 p.m. and then, of course, 2:30 whenever Jerome Powell speaks as well. And whenever we talk about federal interest rate cuts here, this is not the first time that they've cut around all-time highs. They've done this a lot in the past, and we can see that for the next month, the market generally grows green 52.2% of the time. That's really not the best data. I would have expected it to be a little bit better than that. Nonetheless, though, we can see there's a lot of mixtures, especially on the back and forth price action whenever there is a cut around all-time highs.
Yeah, like when you look a year out, the stock market loves rate cuts. Like you could see the next year, 21 out of the 21 times the market finished higher. But like you pointed out, the short term can get a little bit shaky. So I think that is worth keeping in mind while we assess all other information like historical seasonality, this year's news, important technical analysis levels, and everything else that is going on right now. Another thing to keep in mind is actually tomorrow, we do have a little bit of, I don't want to say like a hidden event, but it's not your typical economic event.
Yeah, Nvidia's CEO Jensen Huang is going to be giving a keynote speech at the GTC conference in Washington, D.C. This is a pretty big deal, of course. As we know, there's been a lot of hype with tech stocks. Even today, there was a lot of developments. I know a lot of people were looking at Qualcomm as they announced some new AI chips, but Nvidia had a pretty good day too. And whenever Nvidia has a good day, it really influences the S&P 500. So maybe look for Jensen to have some positive AI comments. And if Nvidia does go green and continue, that would really help fuel the SPY. As we can see by the heat map today, Nvidia has quite the impact.
Yeah, and I'll actually say I think this event will be more influential than most people think. Number one, of course, Nvidia is the heaviest weighted company in the S&P 500. It's the most valuable company in the world, but the market, especially like over like the past couple of trading days and the past couple of weeks, has really been reacting to, like chip news. Like, of course, like you pointed out today with Qualcomm, they went absolutely insane, but like even when you look at like stocks like AMD or MU lately, they have just been moving in some like really strong, crazy ways. So if Jensen says something just out of the ordinary, good or bad, I think we can see some outsized movement out of Nvidia. And of course, that would bleed into the market as a whole, considering how influential Nvidia is. When we look at Nvidia now, Tom, are there any key levels that stick out to you on its chart?
There actually is. As we look at it, they recently were running to the upside and they peaked out around that 195 to 196 range. That is going to be a big range to the upside. If they do start moving, that'll be one of the first big resistances to watch for. And if we go to the daily chart, we can see that they haven't been to $200, at least on their post-split levels here. So that'll be a big psychological level too. If there's some really positive comments, I would expect Nvidia to possibly break that all-time high and push that key $200 level. That will be very critical, and as we know, every time we have a $100 psychological level, there can be some pretty insane reactions.
You know it. And then Tom, talking about insane reactions, let's check out this week's earnings lineup because it is the peak of earnings season, as we can see. Looking at the market for tomorrow, we have SoFi before open, as well as UNH, PayPal, and UPS. So those will all be pretty exciting. And as the week goes on, it just gets better and better. I'll say that, after close on Wednesday will probably be the biggest day of the week, as you have Meta, Microsoft, Google, and Chipotle. But then, it's hard because on Thursday after close, you have Amazon, Apple, Coinbase, and Reddit. So I guess you could say it's a close matchup between those two. But yeah, this, as you would expect, would also have a big influence on the market as a whole, because when you have major companies like all of the ones listed reporting earnings and moving a lot, of course that quite directly moves the S&P 500 with it.
Yeah, this is going to be an insane week. I cannot wait for these companies to report. Let me know in the comments which companies you think are going to be the most influential or best reports. I know a lot of people are watching Apple with a lot of their iPhone sales lately. But Mike, whenever we look at this chart here, there's actually been a pretty positive earnings season so far. U.S. corporates show the highest sales beat ratio in 4 years at 69%, just barely squeaking out the beat above the last quarter. But gosh, we're seeing some pretty positive reports that are surprising, and that's been kind of helping fuel this all-time high run here.
Beautiful. And one thing that I think is worth keeping in mind is that, especially like over these past couple of trading days, we're seeing more of a shift towards risk on, where basically people aren't, just like, super freaked out right now. I mean, the market's at all-time highs, and this is impacting a lot of things, and gold being one of the main ones. Basically, gold fell below $4,000 an ounce today as people are, just getting more optimistic on the stock market and the destiny between US-China trade relations. So I wanted to point this out because I know gold has been a very hot area of the market. It has had a historic run over the past year, but we are seeing some serious selling pressure now. And one thing that I'm very happy that we covered a few weeks ago at this point, his gold was up for 9 weeks in a row, and it has never increased for 10 weeks in a row. I know a lot of people took profits around that time, and gold has basically, fallen ever since. And we can see when we look deeper at what usually happens to gold in situations like this one, the next 2 to 3 months tend to be pretty shaky. So, keep this in mind.
Oh my gosh, Mike, like whenever we go to those 2 to 3 month later columns, the market is green 0% of the time. That is a pretty insane stat to say. And the average percent drop is a little bit scarier even, to see the average percent drop be negative 7.29% and then negative 6.09% is quite the data. So keep that in mind. I know that we called this out a couple weeks ago, like you said, Mike. And of course, the gold market has never really had 10 weeks of uptrend in a row in this way. Now, of course, as we know, it's starting to pull back, so just keep this in mind. It doesn't mean that it has to go red 2 or 3 months later, but especially with, I would say, relations getting a little bit better here and some optimism coming in, it could be something that ends up playing out, that's for sure.
Yeah, and what's nice is that, this can offer multiple different opportunities. Of course, for our super short-term traders, there's opportunity helping push this short-term downtrend. But for all of the, longer-term traders out there who wanted exposure to gold during this massive run-up, there might be like a really good, like medium to long-term, like dip buy style opportunity with gold and silver over these next couple of weeks and months. So we shall see. Either way, we will keep monitoring this. And besides that, Tom, let's get right to the fun stuff for today, which are some setups and predictions. A stock that is close on my radar is JD, and it is to the upside. So this was actually a recent big money play. It was a $1.5 million trade with the 36 strike call options for March 20th of 2026. JD had a nice pop higher today, which is great to see. It has been holding this lower area of support between like $30 to like $32 per share pretty strongly over this past year, and we are seeing increased optimism on US-China trade relations. I think this can make for a good risk reward playing it to the upside in like a multi-week sense, with the main risk being is if this expected trade deal falls through. If it does, we could definitely see a lot of selling pressure, not only with JD, but the market itself. But if it doesn't end up falling through, there could be that can be a very, very good sign for Chinese stocks.
Yeah, and JD's been really basing down here lately. That's a really good area of support that it keeps holding. I would not be surprised if JD started to test 36 and possibly even 38 to 40 if it really starts to run on some positivity. We can see that if we go to the end of 2020, or I would say towards the end of 2024, of course, whenever China stocks do start to run, they can have some pretty insane gap ups and insane rallies. So I will be watching this. Of course, people are expecting this deal to go well this week. Hopefully it does in this case. With my first stock, I'm looking at Qualcomm to the upside. Yes, Qualcomm announced new AI accelerator chips today, and whenever you talk about announcing something new, if it's an AI chip, my gosh, it definitely helps your company. At one point today, Qualcomm was actually up 20% from Friday's close. That was quite the rip, and it was even above $200 a share. Now, it did slow down a lot in the middle of the day. That is a slight cause for concern. The overall rally did fade off. Now, as we go through tomorrow and the next couple trading days, I will be watching for more possible opportunities on dip buys. Of course, for tomorrow, if Qualcomm starts ripping through resistance, and I'm really watching this 192 to 192.50 zone, if we start really ripping through that, I'll be watching it back up towards that $200 mark, if not even higher. But I'm ultimately really watching for a possible dip buy opportunity. I would not be surprised if it consolidated a bit more, considering the way that it fell today. But I had to talk about it given all the hype, and if we go to the daily chart, you can really see how Qualcomm started to blast above a lot of key resistances today. So I would not be surprised if we had a couple days of continuation, or at least just some good scalping opportunities in the middle of all the madness.
Yeah, let's keep it close on watch. Another ticker that is definitely on my radar is SNDK. This is a computer and data storage company that has just been going absolutely crazy. Over the past 6 months, it's up 446%, and over the past 1 month, it's up around 55%. And to me, at this point, the stock is overextended, and based off today's price action, there is risk of seeing a further sell-off. While it's always important to be careful and extremely adaptable, trading the counter trend with setups like this one, it is definitely on my radar for a potential flush lower. It tried to break out today right around that 190 level. It got rejected pretty hard. Basically, it was gapping up in pre-market. Once the market opened, not only was there strong selling pressure, but it also lasted all day long. So SNDK is definitely on my bearish radar, not only for tomorrow, but over the rest of this trading week. If we start to see more pressure put on, let's say, like that 172 to 170 area, we definitely can see some more meaningful selling pressure come in. There's been a lot of people who made a lot of money with this stock, and just like we saw with quantum stocks, basically last week and like 2 weeks ago, when you have stocks get so overextended to the upside, it's just a matter of time before, some natural selling comes in. And when that happens, it tends to be pretty violent. So either way, SNDK is on my bearish radar.
Yeah, looking at those quantum stocks was pretty freaky, but I got to give it to SNDK. It has been on fire lately, but as we know, pullbacks eventually happen, so I will keep it on the radar. But with my next stock, I'm actually looking at Intel for a possible upside continuation play. I actually really liked the way that they reported earnings last Thursday, and on Friday, they really tried to get that continuation going. Now, again, they fell back off. They were not able to keep it going, and then now they dipped. Today, I really liked how they came back up to retest $40 a share, but at the same time, they're actually still holding above that previous resistance around 38 to 38.50. That was a critical zone, and as long as they keep holding above that for the next couple trading days, I will keep looking for more positive price action. I feel like the past couple days, Friday and then today, was more of just consolidation following that big earnings move. That earnings move really got it to blast through a recent resistance, and I will be watching for the daily chart to continue up to $42 plus as this week progresses. Again, if they start to fall and they break through 38.50 to 38, start to maybe adapt and watch it down. If not, even just call it a no play. But either way, I'm watching it to the upside. I thought the positivity it opened today was pretty awesome.
There we go. All right, well, let's jump right into today's momentum plays. And with the first one, we have AST Space Mobile, ticker symbol ASTS, to the upside.
Look at that amazing strength today, all the way into close. They closed up 7.8%. If they break out above $81, then watch them to the upside. They just keep rising.
With the next one, we have Cleveland Cliffs, ticker symbol CLF, also to the upside.
I really like this setup because of the double top heading into tomorrow. Now, if it's able to break above 1390, just above that double top, then watch it up.
And then with the last one, we have Critical Metals, ticker symbol CRML, to the downside.
So one of the biggest pieces of news today with all the China chatter and talk, and especially from the weekend, is that Besant actually came out and said that they're expecting China to delay their rare earth export controls. Now, whenever they talked about delaying this, that's not good for all these rare earth companies that have been exploding lately, like CRML. We can just see on the daily how explosive they've been and then how much they've been starting to sell off. So if CRML is able to break back below $12.50, then watch it to the downside tomorrow.
All right, so we have these three stocks on the radar for potential continuations if and only if they break through the levels listed. These stocks are volatile, so you need to protect yourself. Whether you trade one of these three stocks or something else, focus on making smart, long-term oriented trading decisions. If you need help with that, check out the Key Lessons channel in the Stocked Up Discord. It is completely free. And besides that, let's jump right into today's $1.79 million big money trade, and we are looking at ticker symbol DECK. Today, the trader here bought the 85 strike call options that expire on January 15th of 2027. So these ones have some time to them. Deckers is basically an apparel company behind brands like UGG, Hoka, Teva, and others. It is off significantly from its all-time highs, and the trader here is positioning themselves to benefit from a pop higher. I like a lot how these options are in the money and how they have a lot of time to them, because it makes it extremely likely that the trader here is, buying these call options. There's very few reasons anyone would short these. It's an opening position. It's a, respectable trade coming in at $1.8 million. The stock is down quite a bit. And, they're picking up these call options at a point where the stock sentiment is, pretty bearish. The traders, basically position themselves where they think that the worst is over. I think this is a very interesting setup. I think it's one worth keeping on the radar, but at the same time, this setup should only be considered if you're willing to give it the time it needs.
That's going to be the biggest factor, I think, with this trade, is giving it the time it needs, and also, I think, giving it the wiggle room that it might also need. Decker's just had a pretty negative earnings report. They just gapped down, and they also broke through a pretty major support recently. I think it's smart that the big money's trying to snipe this just below support here. Again, though, it could bounce around for a while. I mean, there's a lot of time to this play. Do not be surprised, if Decker's maybe comes up to test $100, rejects back down, base is around $80 before finally recovering, right? But at the end of the day, there's so much time with this one that you're going to have to be willing to probably hold it through a lot of adversity and a lot of wiggle room. So just keep that in mind whenever you enter this one. I think that with the extra wiggle room, it might be one that you might not want to go all into, but I am glad that they went in the money here. Like Mike said, that gives you a lot more confidence that they are longing this play. And again, just, be willing to give it that time. It's probably not going to be a play that works out in a couple weeks, that's for sure.
Exactly. So either way, let's keep it close on watch. And if you are new to the channel, welcome, and consider obliterating that subscribe button. Every single day we do multiple hours of research to cover basically everything you need to know in the stock market, whether it be SPY levels and analysis, important updates on the US-China trade war, upcoming earnings, historical stats, events to pay attention to, hot stocks to keep close on watch, big money plays. Basically, we cover everything, and if you subscribe, you'll get our videos recommended to you more often, so definitely consider doing that. But we also want to give a giant shout out to today's member of the day, Atabi, in the StockedUp Discord, who posted some very nice gains with Nvidia today. So huge shout out to you. Keep up the great work going forward, and it is awesome to see posts like this one. If you guys are into short-term trading, definitely check out that first link in the description and the comments down below. Today our search bot went pretty crazy with the Qualcomm call options. Those moved up by 843%, but there were also nice moves out of CODX, which moved up by 132%, UAMY, which moved up by 62%, and there were a handful of other tickers that had decent moves, and of course some duds sprinkled in there as well. You also get full access to the big money trades. You can chat with Tom and myself all day long, and basically access all tools you can possibly need for short-term trading, and you can save quite a bit with coupon code BIGMONEY down below. So definitely check it out. It's a place to be for short-term trading. We have a very exciting and very crazy week ahead of us. It's probably going to be the biggest week that we have seen in a long time, between everything going on with the US-China trade war, earnings, interest rate decision, and everything else. So get ready for a fun week. Thank you all so much for watching, and let's crush it in the market tomorrow.